Hi, welcome to Lending Lounge. And today we're going to be talking about syndications. And we have with us one of our experts in syndicated lending, Charles Wambua. My name is Derrick Wise. So, Charles, what is syndications? If you were just to kind of define it for me.
Okay. Thank you, Derek. Syndication is a group of investors that comes together to give credit to a borrower. So it can be about five investors, or it can be 1,000 investors. They all come in and form a syndicate to extend credit to a borrower. Now, in that syndication world, you have the primary and the secondary stage. The primary is the initial forming of that syndication, but that can expand in time when we go into the secondary market where people are buying and selling out of the position of that credit up until the maturity date.
Sure, and it could be because they want to generate a large amount of funds to spread risk amongst
Correct,
multiple entities,
correct,
or it could
correct.
be even reputational, like funding a library or some sort of community enhancement. So a number of banks want to be involved in that, right?
Correct. Initially, it's more so for the working capital, for the borrower, but then when we go to the secondary market, is to make a profit. They buy uh, above or below par.
And that's a big part of the reason why people get into this is either the fees
Correct.
or
Correct.
or making a profit on the trading, the at par, at premium, or at discount, right?
You are correct.
Yeah.
You're correct.
So what are in general, what are like the types of syndicated lending?
There are generally about uh, three types of syndications. The first one is underwriting syndications. That's where the borrower has the agent bank that they're borrowing money from guarantee the full amount of the loan. And we'll go this by an example. The borrower borrows 500 million to a bank, that is the agent bank. The agent bank will guarantee the full 500, even though they might decide and go and get a syndicate, but they will guarantee the full 500. The second one is club deals, whereby it's normally a smaller group of investors, maybe like five, but the borrower is involved in forming that group. So every single investor is guaranteeing their share to the borrower. So the agent doesn't take the full brunt.
I see.
The last one is best efforts. So it kind of acts like the first one, but the agent is only guaranteeing a part of that loan, meaning the borrower comes, says they want 500 million, the agent will guarantee 200 million, but they will say, based on best efforts, I'll go out to the market and try to see if I can gather 300 million. If I don't gather the full 300, I will only fund you what have accumulated so far.
Gotcha, gotcha, gotcha.
Yes.
Now, so we here at AFS, we've been noticing, and you've been noticing here at AFS as well, a lot of more middle market banks wanting to get into this business. I mean, I think part of the reason is the profitability, but well, in general, what do you see as the reason why banks may want to get into the syndicated lending space?
Especially, that's a very good question, especially with our AFS Vision platform, right? So AFS originally was focused on the bilateral commercial side of the business, right? Whereby it's just the agent and the borrower,
Hmm.
right? Doing the
Doing
lending.
CRE, CNI, those types of books. Yeah.
Correct,
Yeah.
right? But then as time has gone by, we've seen interest in our middle market clients actually wanting to get into the syndications business. Why? First of all, they want access to be able to get the higher yields involved in the syndicated market, right?
Right.
Because you're dealing with larger organizations borrowing money.
Hmm.
Secondly, because it's these larger organizations, there's less risk because they've already established themselves out in the market for a number of years and their business has been booming.
Right. And if I default on 1 million, I have a problem. If I default on 100 million,
Right.
we have a problem,
Right,
right?
right. Exactly. And you know what? That's a very good point because banks have a risk threshold,
Yeah.
mostly about 15% of how much they can borrow to one borrower, right? If so it's 15%. So if they can borrow to many larger organizations,
Spread that out.
but less percentage, right? Then that means they're involved in more business, more industries. They can expand in their geographical um, area where they can do investments. And also, you talked about relationships earlier. If the large organization knows I'm part of that syndicate, then we're already forming a relationship.
Sure.
I can assist them in other businesses that they might want to expand to.
And at the end of the day, have more opportunities to make some sort of profit, right?
Exactly.
Well, thank you very much. This has been very helpful. Thank you for watching Lending Lounge. We appreciate your time and join us next time.
Thank you very much.
Cut, Renee, cut.
Let,
I
let,
forgot to lift the glass though. Oh well.
oh, it's fine. Thank you. I think you noticed where when we were talking about the bylaw.
I did. It's fine.
But you are so quick in catching up.